Hi, everybody. I'm Rick Edelman. All kinds of tech issues today, which is ironic since we're talking about the techiest of tech ETFs. Welcome to this very special webinar, answering the top 10 questions about the new spot Bitcoin ETFs. Nobody better to tackle these questions than Matt Hougan. He's the Chief Investment Officer of Bitwise Asset Management. Matt, join us. I'm so glad you're with us. I know that you're not getting any sleep.
That is right, Rick. What a historic couple of days. I will sleep well this weekend, but it's been a historic launch for Bitcoin, a historic launch for the ETF industry, a historic launch for Bitwise, and we're just so excited to have these products live on the market.
And we're going to get into all of this, but I have to say right off the top, without a doubt, in my opinion, and I know you share this point of view, Matt, the single best feature of these new ETFs is that they trade during market hours. We get to actually go to sleep Friday night through Tuesday morning because Monday's a holiday. Can't do that with Bitcoin, which is 24/7 globally.
So true. So true. Thank goodness for the legacy financial system for this one time.
So I know everybody is familiar with Bitwise, but just for the heck of it, talk to us about who Bitwise is.
Yeah, absolutely. And more people are coming into this market every day, so people may not know. Bitwise is a specialist crypto asset manager. We're one of the largest crypto asset managers in the world. We run the largest crypto index fund in the world. And we've been working in this market managing money on behalf of advisors, family offices, and institutions since 2017. I think we're known both for our focus on that RIA and advisor market, as well as our original research and education. Just like you at DACFP, we're dedicated to education. We were able to write the CFA Institute's guide to crypto. We have a wholesaling team out there answering advisor questions, and we strive to be the partner of advisors as they enter this world of crypto. So that's Bitwise at a glance. We're really proud of what we built and really proud about what we're building in the future.
And I've been, honored to be a part of Bitwise for a very long time. They, as Matt said, the oldest and largest pure crypto only manager, and it's reflective in the fact of how well Bitwise has done with the launch of these new ETFs. There are, of course, 11 of these ETFs all came out of the starting gate at the same time, and Bitwise is amassing more in AUM already than some of the biggest ETF providers in the country. And that, I think, speaks volumes to the role that you have in this community, the brand you've already built in this community, and the fact that people recognize this is not just a land grab as it is for some ETF providers, but this is an opportunity for you to hook up with a fund company that has deep experience and expertise in this space. So congratulations to you, Matt, and the entire team for the success you've had already in this category.
Thank you, Rick. We're really excited to see BITB pull in the most inflows in day one, and we're seeing exceptional trading in day two. So off to a good start and many miles to go, but it's great to see the community recognizing that and coming into our fund.
So we have 10 questions. These are the top 10 that really matter most, get to the heart of the issue. We're going to go through all 10. I want to give you all a warning here. My technology has been temperamental, shall we say. I wouldn't be shocked if I got kicked off because it's happened to me in some other events. Matt is perfectly capable of running through this. And we've got Don Friedman, the president of DACFP, on the standby as well to carry on the conversation if somehow I do get kicked off. The show will go on, as Ethel Merman has always insisted. Having said that, if you have questions based on what you hear Matt and I talking about, there's the Q&A box here on your Zoom screen. Feel free to type in your questions. We'll be looking at those throughout this event, and I'll be peppering those, weaving them into the conversation as appropriate as well. First off, okay, great. Everybody, you and I have been deep into this for ever since Bitcoin has been around, 15 years now. We've been working intently behind the scenes with the SEC and others trying to get these ETFs into the marketplace. We're so excited and thrilled that it's finally happened. I kind of feel like we just married off a daughter. It's just so exciting. Maybe that was a horrible.
A good analogy. No, it's a good analogy. I liked it.
But okay, for everybody else, who cares? Why, Matt? Explain to us. Why is the launch of these new spot Bitcoin ETFs, why is it important?
Well, for investors looking to gain access to Bitcoin, it's important because it's now the cheapest, easiest, and most secure way for them to do it. If you back up a week ago, the largest crypto fund or the largest Bitcoin fund in the US charged 2% a year in fees. Today, BITB charges 20 basis points. That's a 90% reduction while providing, audit by KPMG and custody by Coinbase Institutional and the full backing of Bitwise's team. So if you're an investor, it's just gotten a lot better. If you're an advisor, it's been really hard to gain access to crypto. I mean, you and I know, Rick, that advisors can do it, but they had to jump through hoops. They had to take extra steps. They had to take on certain challenges at a compliance level. An ETF over time solves all of that. You can buy it just like you would buy SPY or EFA. It fits into your plumbing of your system. You can charge a fee on it. You can talk to your clients about it. You can bring their assets from Coinbase. And remember, 50 plus million Americans have crypto assets at Coinbase. You can bring them into your practice and grow your practice that way. So it's a win for advisors. Also worth noting, it's a win for Bitcoin. Right? If your long-term vision of Bitcoin is it's going from this crazy alternative thing started by a few cypherpunks into a major digital store of value or potentially an apolitical currency rail for the world that can live alongside fiat currency rails. If you think it's on that journey, and I would say every indication is it's on that journey, getting an ETF with a regulatory stamp of approval that lowers fees, makes it easier to hold is an important step on that journey. So it's a win for everyday investors, it's a win for advisors, and it's a win for Bitcoin itself. That's why we're all so excited today.
It's really hard to overstate the significance of this. We really have crossed a major threshold in the development and evolution of blockchain and digital assets and the entire crypto technological environment. This is going to be looked back as significant a day, I think, as Bitcoin Pizza Day. Which is fondly referred to by the crypto community as the day the very first commercial transaction occurred in Bitcoin. That happened way back in 2010. And today we now have the release of Bitcoin ETFs in the marketplace. And this is going to be looked back in the future as one of the most important critical days, not only for crypto, but for investors. I continue to believe that this represents one of the best investment opportunities. We're going to get to that, but related to it is our question number 2, Matt. How big could these Bitcoin ETFs become?
Yeah, very big is the answer to that, Rick. I've seen estimates ranging up to $200 billion. Now, I don't know if they will get there. At Bitwise, our own estimates is that they're likely to pull in about $55 billion in net flows over the next 5 years. Importantly, that's flows. If you think the price of Bitcoin will increase, that's not AUM, right? That could be double, triple, quadruple, or more. But we think this is a market measured in tens of billions of dollars. I've gotten a lot of questions actually over the last 2 days. How can you run a business with BITB priced at 20 basis points? Part of the answer is we already have a large established business. So layering an ETF on is not a large incremental cost. But the other part of that answer is that we think this is a multi-billion and multi-tens of billion-dollar market. And when you get to those size, you can build a great business on low fees and help investors at the same time. So the short answer is eventually $50 to $200 billion. Those are the estimates on the street. In year 1, maybe $5, maybe $10 billion. That would be a record for ETFs. But I think these are going to be very big indeed.
Let me also add that I think your projection calculation is low at 50 to 80 billion in AUM flows. My number is 150 billion. And that's just from the independent RIA channel alone. RIAs manage $8 trillion in assets. They have all said in your surveys, which you released just one last week, plus other surveys we have seen from others, say that 75 to 80% of advisors are going to allocate, and that they're going to do an average 2.5% allocation. So quick arithmetic, 8 trillion times 75% times 2.5%, that's $150 billion of flows over the next couple of years. And that's just the independent channel. Forget about the wirehouses, forget about institutions, forget about the retail market. So I think your numbers are going to prove to be low, which means the impact on Bitcoin's price is going to be high. What do you think about all that?
I love that. I think that's exactly right. And those other markets you talked about are big. I sometimes like to say that, sometimes investing is complex, sometimes it's simple. With Bitcoin, its price is set by supply and demand. We know the new supply is falling in half in April with the halving, and you have this demand shock that you're talking about, potentially 150 billion in flows just from the RIA community, more layered on top of that. That's a pretty good combination. That's a pretty good setup. I'm optimistic we'll see new all-time highs this year, and that will go on from there on Bitcoin. So I do think it's well positioned. The ETFs are a catalyst over time, and I love your estimates. I hope they're true.
Yeah, me too. And here's the funny thing: even if I'm wrong by half, we're still talking about pretty incredible numbers. So what, add it all up, this is question number 3, what could all of the above do in terms of impact on Bitcoin's price?
Yeah, it's going to be significant. Look, we were already in a crypto bull market before this, let's not forget. Bitcoin's price bottomed in 2022. It recovered significantly in 2023, up 155%. We were already in a bull market. And when you layer on a supply shock and a demand shock moving in opposite directions, I think it's very hard not to be optimistic for the long term. Another way to think about this, to bring an ETF analogy, when the gold ETFs launched, gold was a $2 trillion market. Today, it's a $15 trillion market. And gold ETFs weren't as important to gold as they are to Bitcoin. So I do think that this is transformational. I think that over time, this will move crypto to be a $10+ trillion market. And I think there'll be a before Bitcoin ETF and after Bitcoin ETF era in crypto. But even in the short term, I'm very optimistic for 2024, extraordinarily optimistic for 2025. We now have the momentum of consistent flows from the ETF to push Bitcoin forward. I think it's very constructive.
But this is not a static environment. This is incredibly dynamic, and timing, we all hate that word in investment management. We know that time in is what matters, not timing. But let's face it, Bitcoin is right now around $45,000, $47,000 as we record this. And we are talking about a 3x, 4x, 5x, some are even arguing 10x or 25x increases in the price over the next decade. That argues for hurry up. I mean, this is a timely trade. And that means advisors need to get off their butts and start paying attention to the technological underpinnings of this, get the knowledge you need to understand how this works, figure out which of these ETF products you want to use, and begin allocating to clients, because literally the clock is ticking. The longer you wait, the slower you are, the fewer gains you're going to end up with. No?
I love that. Absolutely true. And I just add one more thing on top of it. Until yesterday, if a client came to you and asked you about Bitcoin, you could just say, many advisors, I can't gain exposure to it. That wasn't exactly true, but it was close enough to true. That's no longer the case. You now have to decide yes or no, maybe later. And you're right that it's still early in Bitcoin, but it's maybe close to the end of the beginning. Right? We're moving into a new chapter where it is widely available. And if you're not doing your due diligence now, other people are.
And that's a wonderful phrase, important to highlight. It's not the beginning of the end, it's the end of the beginning.
That's right.
10 years ago, 15 years ago, even I would guess you could argue almost 20 years ago, it took a lot of guts to buy stock in Amazon. Today, everybody owns it, because it's in every stock ETF pretty much. So your choice, you're going to own Bitcoin one day. It's your choice. You can do it now. You should have done it 10 years ago, but you can do it now, or you can wait another 10 years and you'll end up with the price and the performance accordingly. So your call. That's what it comes down to. I also think there's going to be another side effect, a very good, healthy, beneficial side effect to all of this, the availability of Bitcoin in ETFs. And the way I want to phrase it is by sharing just a really quick story, because it just happened last week on the eve of these new ETFs becoming available. A financial advisor I've known for decades called me for help to assist her client who recently reached out to her for help regarding Bitcoin. 6 months ago, the client called her advisor and said, I'd like to buy Bitcoin. Can you help me? And the advisor said, no. And my firm doesn't have any products available on our approved list. I'm not able to assist you. And the client said, okay, I'll just go do it on my own. And the client went and did that, surfed the web, found a firm online that looked pretty decent, impressive website, sent this firm $1 million out of their account and bought Bitcoin from this online firm. 2 weeks ago, the client called their advisor, which is what led to her calling me, and said, I've made a lot of money in my Bitcoin over the last 6 months with this firm. I want to cash it out. I contacted the firm and they told me they'll send me my money, but I first have to prepay the taxes. And I need to send them $300,000 in order for them to send me all of my money. And the client was calling the advisor to get the cash, to get the 300 grand to pay the tax. And it was at that point, the advisor realized that the client is dealing with a scam, because there's nobody anywhere, no financial services firm that requires prepayment of taxes. There's no tax agency that demands it, certainly not the IRS here domestically. So the advisor called me for help. Is this in fact a scam? Is there any way to help the client, blah, blah, blah? The short answer is no. The advisor was able to save the client the 300 grand loss, but the $1 million is gone. And I blame Gary Gensler for this. It was the SEC's refusal to allow these Bitcoin ETFs onto the market that forced the advisor 6 months ago to say to the client, I cannot help you, you're on your own. Now that these ETFs are here, every advisor in the country is going to be able to say to the client, sure, I'm happy to help you. And the advisor is skilled enough to be able to watch out for the frauds and the crooks. I think we're going to see a dramatic reduction in crypto fraud by the virtue of the availability of these investments.
I couldn't agree more. It's absolutely true. It's become cheaper, easier, giving peace of mind. They're regulated packages. Yeah, this is a huge win for American investors. People wanted to own crypto, and now they can do it in a safe package. I think that's a great story and a great example of why these ETFs are on the right side of history.
And just to illustrate how horrible this case was for that client, they pulled that $1 million out of their IRA, which means they now owe massive taxes on top of it. It represented a third of their net worth. There's no way the advisor would have allowed it, tolerated it, permitted it. They would have done everything to persuade the client against it. But by working on their own, the client didn't know what they were doing. And look at this horrible tragedy for that family. So I'm really excited about the availability of these, frankly, for that reason alone. But it raises the issue, Matt, because I alluded to the fact that, and you did as well, that these massive inflows over the next several years are going to have a huge demand on a fixed supply asset, leading to an increase in price. But having said that, many advisors are still stuck with the fundamental question, and this is question number 4, how do you value Bitcoin? Jamie Dimon says it has no intrinsic value. Warren Buffett says it's rat poison squared. How do you value it?
Yeah, I think everyone gets hung up in the pointy-headed academic world because they want to do a discounted cash flow analysis. That's how they were trained to evaluate Amazon stock, and a Bitcoin doesn't have cash flows, and therefore you can't do a discounted cash flow analysis. But there are plenty of things that we are all familiar with that don't have cash flows and yet have very significant value. Gold is perhaps the best example. It's a $15 trillion asset. The easiest way to value Bitcoin is to look at the markets it's trying to address and make your best estimate on how much of that market it will win. So if we look at something like the gold market, do you think a digital version of gold, which many people think Bitcoin is, will take 25% of that market, 50% of that market, 100% of that market? Will it grow the market because it's easier to own and it attracts a new generation? If you think it'll take half the gold market, it's relatively easy to come up with a valuation of Bitcoin. You just take $7.5 trillion and divide it by 21 million, and you have a price target in the mid $500,000 range, give or take. I think Bitcoin's going after even larger markets than that. I think it's going after markets in offshore wealth. I think it could be a political currency rail. I think it could be used by many emerging market countries. I think it'll be held by central banks over time. And all you have to do to arrive at a valuation is make your estimates on what percentage of those markets do you think Bitcoin will capture over what time period, and then you discount them backwards. So I would say, don't believe anyone who tells you that Bitcoin can't be valued. We have a whole valuation slide at Bitwise. We have a base case, a bull case, a bear case. Our base case assigns a current present value of Bitcoin above 150,000. Kathy Wood's out there talking about $1.5 million Bitcoin. But just, yeah, don't believe the hype. There are plenty of valuation tools you can use to decide if Bitcoin is over or undervalued. At the end of the day, one way to look at it is it's still tiny. It's less than $1 trillion. If it's going to succeed, it's going to have to be much, much bigger than that. And you can use those tools to estimate how big.
In my book, The Truth About Crypto, I have an entire chapter on Bitcoin valuation. Everything Matt just said, plus a whole lot more. A lot of the data in my book comes from Bitwise, in fact. So take a look at that, and it'll give you a lot of additional info. I think we can simplify the whole conversation, Matt. Bitcoin, in terms of valuation, maybe Jamie Dimon's right, and Bitcoin has no intrinsic value, but it sure as hell has a price. And right now that price is $47,000. So I think we can simplify the whole thing. What's the value of a Mona Lisa? I don't know, but it certainly has a price in the art world. And that's, I think, all that really matters.
That is exactly right.
All right. So let's assume we get comfortable with that conversation. The real question then, number 5 on our list of 10, how does it fit into the portfolio? How much should we allocate into our portfolios?
Yeah, all these questions tie together because this question of valuation, this question of volatility, they all speak to this question of where it fits in a portfolio. And from my perspective, a 1 to 5% allocation to Bitcoin in a portfolio, historically, looking at data, has positively impacted your risk-adjusted and absolute returns in a really significant way over every 2+ year holding period. As long as you rebalance, if you have a 1 to 5% allocation, you add it to your portfolio, it's created higher risk-adjusted returns for you. That shouldn't be a surprise. It's the best performing asset in the world over the last 1, 3, 5, 10, 15 years. It has low correlations to stocks and bonds. It's liquid. It's a beautiful asset. I think where people get hung up with its volatility is they imagine owning only Bitcoin. And of course, if you own only Bitcoin, it's enormously volatile. But non-correlated or low correlated assets, even if they're themselves volatile, when you put them in a portfolio context, don't cause the portfolio itself to become extremely volatile. That's what it shows historically. You talk about this in a great way. Add 1% Bitcoin. If it goes to 0 tomorrow, you've lost 1% of your portfolio. Guess what? The S&P 500 goes up 1 or 2%, down 1 or 2% every day. We never shrug our shoulders. And yet a 1% allocation to Bitcoin, had you made it 5 years ago or 10 years ago, would have been transformational from a wealth building perspective. And I think that potential is still there in the future.
Yeah, I think that's really the key, is to recognize we don't need to have a massive allocation to this. And that's why it's really not as big a deal as a lot of advisors presume that it is. The joke that I often make is, if we're putting 1% of our assets into Bitcoin, why are we talking about it 50% of the time? It's just another asset. If you believe in diversification, you already have dozens of different asset classes. You use them all because you understand correlation, that the efficient frontier is improved by adding different assets that perform differently at different times. So why wouldn't you add the newest of all asset classes? 1%, 2% allocation, call it a day, move on. It's a check the box scenario. This is not a big deal. I don't know why everybody's trying to make it such a big deal.
I love that. It's very true. It's very true. I've been talking to some people for 5 or 6 years. Bitcoin's up, thousands of percent, still thinking about it. So now at least it's easy for them to access.
And in fact, that raises the next really big question, number 6 on our list, custody. You mentioned earlier, which is entirely correct, that Bitcoin historically, all digital assets, have been cumbersome, complicated to buy, difficult to maneuver for people that are unfamiliar with any of this. You used to have to go to a crypto exchange. You got to deal with hot and cold wallets and private keys. And who is that custodian you're dealing with? We had Mt. Gox, we had FTX. Could we even trust these outfits? So the question now really becomes very germane here. Who's the custodian? How are you at Bitwise managing the custody for the Bitcoin that you're buying in these ETFs?
Yeah, it's a beautiful question. We've been doing it for 7 years, and this is what makes ETFs so valuable. They provide peace of mind. You don't need to evaluate this offshore exchange versus that offshore exchange. You don't need to worry about someone stealing your phone and, draining your Coinbase account or forgetting your password. All of that goes away with a fund like BITB. We get inflows, we get cash into Bitwise. We go out and we buy Bitcoin from the largest trading counterparties in the world, and it's deposited in cold storage with Coinbase Institutional Custody, which is the largest Bitcoin custodian in the world. Most of the ETFs use Coinbase Institutional.
I think it's 8 out of the 11, isn't it?
8 out of the 11, because they're exceptional at what they do, and they've been doing it so many years with no hacks or issues. It's extremely secure. And I can't emphasize enough, all of those challenges that you've had go away. Instead, you're working with a regulated third-party custodian. You have firms like Bitwise with deep ETF, crypto, and security expertise who are due diligencing those custodians on a regular basis, right? Putting them through their paces to make sure they're best in class. It really provides that peace of mind, that easy button that makes a lot of those challenges crypto has had over the years go away.
It's really interesting when you buy stocks or stock ETFs from your advisor, via your platform, whether you're at, I don't know, Schwab or Merrill Lynch or wherever. Nobody ever asks the question, well, who's your custodian? Because in the stock market, we've been doing this for over 200 years. We've gotten really good at custody of equities, and it's a no-brainer issue. That's kind of where we're at now with crypto too. We've got 15 years of experience. We now know how to do it right, which is why it's so painful when we see people persisting in doing it wrong and getting caught up in frauds and scams. So the fact that the ETFs make it as simple and convenient as it is when buying stocks and bonds, I think is a huge hurdle that we're overcoming from initial investor inertia. So I think it's a really excellent element. There's a related element, Matt, to this that is also equally fabulous. I think even more so. It's a bigger deal, and it's related to question number 7. Crypto taxation is complicated. Many of the rules haven't yet been written by the IRS because this is a new technology. I mean, the IRS never contemplated prior to crypto the notion of staking or forks or airdrops. These are complicated new innovations brought about by blockchain technology. So a lot of crypto tax law has not been written. And simultaneously, when people are buying Bitcoin, where we do have clarity of tax law, there's the tax recording and record keeping element, which is highly complicated because those crypto exchanges are not required to file 1099s on your behalf. There isn't a convenient statement that you get like you get from Charles Schwab. So taxation is a big thing in crypto. Talk about how the Bitcoin ETFs handle taxation.
Yeah, I love that you bring it up because they make it so easy. At the end of the year, you get a 1099, just like you would with most of your other investments, and you file that as part of your tax return. I wish I had more to say, but that's the end of it, Rick. We have tax and audit from leading firms nationally, and because it's in an ETF wrapper, it's really that simple. You get a 1099 and off you go. It's not a K1, it's a 1099. You get it in a timely fashion, and it makes all of those problems go away. Again, it's really simplifying this process of buying, owning, reporting, holding Bitcoin.
So 2 things I want to elaborate on, because you're absolutely right. This is first and foremost an ETF. It is not first and foremost Bitcoin. Bitcoin is simply the asset that's inside the ETF. But from the IRS's perspective, it's the ETF that matters. And you know how ETFs are taxed. You've been dealing with ETFs forever, and you know how they work. It's incredibly simple and easy. And this makes all the complexity of Bitcoin from a tax perspective go away. It's absolutely wonderful. Related to that, a lot of people I've been getting this question a lot. I got it twice already this morning on our website at DACFP. People saying, Rick, can I buy these ETFs in my IRA? And the answer is?
Yes, of course you can. Absolutely. It's just an ETF. That's, again, part of the beauty of this. They're available through the brokerage window right alongside Apple stock and SPY. So you can buy them in your IRA. If you have other Bitcoin exposure, you can dramatically lower the cost. and you get all these other benefits that Rick and I are talking about. It makes it easy.
So both deductible IRAs and Roth IRAs, as well as Roth conversions. So it's just an ETF. This is what is so cool about this, why we're going to see so many people piling in with asset flows, because it's just never been easier. So, all right, let's get down to the real key element here, Matt. We've been talking generally and conceptually about the new ETFs and why they're a big deal in the marketplace, why they're opportune for investors. But the fact is, there are 11 of you. There are 11 sponsors that have simultaneously launched these ETFs. Kudos to the SEC for doing it in that way. No front running. Nobody got first dibs opportunity here. This is great news for the investor because it's forcing all of you to compete. I think it's a big reason the fees are so low, and Bitwise is among the lowest of all the fees in the industry. And you're waiving that fee for a period of time. You're also donating. You didn't mention this. You're donating 10% of your profits to nonprofit organizations who are building out the crypto development community. You want to elaborate on that real fast?
Yeah, absolutely. We're really excited. 10% of the profits from BitB will go to Bitcoin open source developers. They maintain and upgrade the code surrounding that lets Bitcoin run, as well as apps built on that space. And we think the ETF needs to be good for crypto, right? We're an asset manager that cares deeply about Bitcoin and crypto. And so this 10% donation to Brink, OpenSats, and the development fund of the Human Rights Foundation for Bitcoin really is a way to pay back into that community that helps maintain this wonderful asset that we're all building on top of. So we're very excited about that.
All right, so let's talk about, how do we choose? There are 11 of you. How should investors and investment advisors, how do you choose between these 11?
Yeah, you choose BitB. It's easy. No, more seriously, it's like any other ETF, right? There are a couple of things that people should look at. Fees are a primary consideration. You need to have an ETF that has exceptionally low fees, and we're proud to be right near the bottom on those fees at 20 basis points. We're the lowest cost ETF on day one, 86% cheaper than the highest cost fund. So there's a wide range of fees. The less you pay, the more you keep. So make sure you're on the low end of that. The second thing you look at when you're evaluating an ETF, and of course, I built an ETF analytics system, so this is my bread and butter, is you look at trading and liquidity. You want an ETF that's liquid and trading at tight spreads. I've been watching BITB today. It's been trading between a penny, 2 pennies, occasionally 3 pennies wide, often 1 penny wide. You want that exceptional liquidity in your ETF. So low fees, liquidity. And then behind the scenes, I think you really want a crypto expert. I think you're going to see this over time in the performance of these ETFs. You want someone who knows how to trade Bitcoin, who's able to support these ETFs with education, who, when a news breaks, if you're an advisor and a client calls about the latest development in Congress on crypto, you have someone to call and give you an answer. What we're trying to do at Bitwise is stack all the best advantages for our ETF. Low fee, exceptional liquidity, deep crypto expertise, a distribution and research team that you can reach at the drop of the button. You can email me at matt@bitwiseinvestments.com. I'll answer your question. We really care about making this a success. So that's why I said just buy BitB. I do think we've stacked all the right things together in this ETF.
I want to elaborate on one thing you said, choosing a low-cost provider. You are at the bottom of that ladder, and among the lowest fees in the industry. You said that you're 89% cheaper than the most expensive. I want to mention Grayscale here because their GBTC is 1.5%, 150 basis points compared to yours at 20. Yesterday, on the very first day of trading of these ETFs, there was $4 billion traded, which shows the incredible level of interest in this. But that $4 billion was a bit of a misnomer. $2 billion of it were inflows into 10 of these ETFs. $2 billion of it were outflows from one of the ETFs, GBTC. Investors who own GBTC recognize that they're paying 150 bips for something that everybody else is offering for a whole lot less. And there was 2 billion sales of GBTC and 2 billion buys of the other 11 and of the other 10. And of the other 10, Bitwise was among the top recipients of those asset flows. By the way, I just moved a whole bunch of money myself out of GBTC and into BitB. And I'm a huge fan of what you're doing and how you're doing it. And for some ETFs, it's just a land grab. They just figure they can grab market share and make a buck. Why not? But they don't have any particular expertise. I also find it interesting that a couple of ETF providers had to outsource their expertise because they didn't have it in-house. So I think it's really noteworthy to point that out. This is a huge opportunity for you to be able to show value add to your client by saying to your client, you own GBTC. Let me show you how you can save a bunch of money. And oh, by the way, now get my assistance in managing it for you as part of the rest of your diversified portfolio. This is a wonderful business building opportunity for advisors that I hope they don't squander.
I love it.
Let's talk about question number 9. What do advisors need to know before they start trading in these ETFs?
Yeah, I mean, you're going to want to get your hands around Bitcoin itself. You're going to want to do this sort of education that DACFP and Bitwise is providing. And specific to trading, again, all the same rules apply for these ETFs that apply for traditional ETFs. Limit orders are better than market orders. If you're going to trade in size, you may want to work with a market maker or call the capital markets desk at a firm like Bitwise to help you execute that. Again, the same things you would do in other ETFs, you should do here as well. So don't, print a huge market order in any of these ETFs. Use limit orders, trade smart, call the capital markets desk. I know Bitwise staff's a full desk, and we'd be happy to talk you through how to find the best liquidity in our ETF, and I'm sure the other providers do. But these are new ETFs. The trading has really come in on day 2 to the point where they're all the leading ETFs are trading at very tight spreads. So there is a lot of liquidity in that space, but it still pays to use limit orders. It pays to use common sense.
I did the same thing, exactly what you just described. I used Schwab's capital markets desk yesterday to assist in my trading, and really helped a lot, really mattered a lot. The use of limit orders is really crucial in a new environment like this. And this is another way you can demonstrate value add to your clients. So I really encourage everything that Matt just said. Question number 10, and then we're going to jump to some of the cues that you've posted here today. Let's go back into a big picture, Matt. What does this approval of these ETFs mean for Bitcoin regulation overall?
Yeah, I think it's a game changer for regulation. You can't undo this. There's now a Bitcoin ETF approved through the SEC on the market today, and we're experiencing just how good that is for American investors. It's solving all these fraud problems. It's solving these offshore exchange problems. It's reducing costs and improving security. And I think regulators are going to have to wrestle with that fact. You also have large institutions like BlackRock and Fidelity and Invesco and others that are now committed to this space. And I think that's beneficial. So I think we're going to be on an improved, accelerating regulatory path. And that's going to be good for Bitcoin. It's also going to be good for other parts of the crypto ecosystem. There's no way to look at this and not consider it a win for American investors, a win for the ETF industry, a win for financial advisors, and a win for crypto regulation. It's really moved us into a new era, and that's going to actually provide some additional catalysts as some of the challenges that this industry has faced sort of break down, and some of the negative narratives are replaced by these really positive narratives of low-cost products that can deliver strong returns and help people gain safe, secure access to this incredible asset.
So let's talk about what comes next, because these are some of the questions we're getting. Thomas has asked, will there be an Ether ETF coming?
Yeah, great question. I think there's a line of sight on an Ether ETF. I've seen people say it's coming in the next few months. I think that's probably optimistic. If you look at what the SEC wrote in its approval letter, it tried to cordon off Bitcoin. But there's a large regulated Ethereum futures market out there. And I think eventually, not even eventually, I think likely within the next year, we'll see an Ethereum ETF. I'm not sure we'll see ETFs beyond that for a period of time. There probably needs to be regulatory changes before we get beyond Bitcoin and Ethereum. But I think we have a line of sight on Ethereum. You'll also see variations on Bitcoin ETF. I saw someone filed for a covered call ETF. I imagine we'll have downside protection versions of Bitcoin ETFs. The ETF innovation engine will be revving on this, and so expect to see a number of funds.
Jeffrey has asked a question about the functionality of ETFs and the impact on Bitcoin. He says that I've heard that these spot Bitcoin providers have a different 4 p.m. cutoff time for orders. Is that true? And is there a variance among them?
Wow, I love it. That's a deep ETF question.
Yeah.
The reality is in any ETF, not just Bitcoin ETFs, different providers use different cutoff times. So as an example, in the Bitcoin ETF, we use a 2 p.m. cutoff time for new creation units. In other words, we need to receive orders to create new shares by 2 p.m. for them to be considered, and then we execute at 4 p.m. Many other providers have earlier cutoff times, maybe noon. Some providers actually have cutoff times a day ahead of time. It all has to do with how efficient you are at bringing in those orders and then executing trades. Bitwise, of course, has been doing this for 7 years in our other funds, so we can be extremely efficient. And that should show up in heightened tracking and tighter spreads. But different providers are at different spaces. There are at least 2 providers that are next day creation. We're pretty happy with our 2 p.m. cutoff, which I think is among the latest in the market.
This anonymous attendee has written, I love this. When Rick sold his GBTC shares to buy BitB, didn't that cause a capital gain, which is forcing Rick to pay taxes? The answer is yes, absolutely right. And of course, I had to take that into consideration. But quite frankly, never let the tax tail wag the money dog. Unless I'm going to die holding my GBTC, I'm going to pay the tax sooner or later. And the longer I hold it, the more I'm paying 150 bips as opposed to 20 bips. So, you know, what do you say to a client who says to you, I don't want to sell X because I don't want to pay tax? You need to maintain diversification. You need to focus on the fact you're going to pay the tax sooner or later anyway. We all expect capital gains taxes to rise in the future because of the federal budget issues and the government's need to raise more money. So I figure I got a deal by capturing today's low capital gain rate compared to the future higher rate, and taxes are inevitable. Never make a decision predominantly based on taxes or you're going to get yourself in trouble. Matt, we got a lot of questions here from people about BITW. Bitwise has been hugely successful in its leadership with the top 10 crypto index fund, which BITW is. So talk about BITW, talk about the impact of that fund, its role going forward. Will that ever be an ETF? You know, give us a broad brushstroke of BITW. A lot of folks own it.
Yeah, I love it. I own it myself. Have a significant investment in BITW personally.
Me too.
Yeah, I think it's a fantastic fund. Of course, an index fund, a managed index fund, is a different exposure than Bitcoin itself. It's holding a diversified portfolio. It's making the promise, no matter how crypto turns out, you'll be invested in the leading assets. And it's got a tremendous track record of screening out assets with risks. It didn't hold Luna. It didn't hold FTT. It doesn't hold Dogecoin. And so I think there's a strong value prop for what Bitwise 10 BITW is. I also think many people who come into Bitcoin will eventually want to diversify their exposure. So we're very excited about that product. We have committed to converting that to an ETF as soon as we can. We love the ETF structure at Bitwise. That's why we were so excited to launch BITB. And so as soon as it is possible to convert BITW to an ETF structure, we will. It's not yet possible. Every step we take forward, including the launch of Bitcoin ETFs, the potential launch of Ethereum ETFs, get us closer, and we're holding out for that day. So that's our plan with that product. It's a flagship product. We care about it deeply. We're going to continue to run it at excellence, and we will convert it to an ETF as soon as we can.
You know, there's a really interesting element to this. I think these new Bitcoin ETFs are going to surprise folks, or not surprise them. They're going to, here's what I mean. Soon, advisors are going to realize after they buy these Bitcoin ETFs, they're going to eventually realize that all they did was buy Bitcoin. Advisors love diversification. This is a single asset ETF. It doesn't own Ethereum. It doesn't own Solana or Polygon or Algorand. And advisors are going to quickly realize well, if I want to broaden my client's crypto exposure, I need to move beyond this ETF. And Bitwise offers that not just with BITW, but with your SMAs. Talk about those.
That's exactly right. Yeah, we actually have 18 other crypto funds, including SMAs that can help you diversify beyond Bitcoin. We have completion funds that exclude Bitcoin, but started at Ethereum and hold everything down. We have our crypto category leaders SMA, which holds the leading asset in each of the major markets that crypto is addressing. So we love further conversations. I think you're absolutely right that many people are going to come into Bitcoin and then migrate to other assets. I know Bitcoin was the first crypto asset I owned, and today I own quite a few. So we are a full service crypto fund provider, whether that's SMAs, private funds, ETFs, equity ETFs, active strategies. And so we love building relationships with advisors. And as they expand in crypto, we're there to expand right with them.
We have published a chart. I'll mention details of it in a little bit on how you can get a hold of this, that easily compares all of these 11 ETFs. And one of the categories that we look at is the number of other crypto offerings. Most of these ETF providers have zero other offerings, which means they don't have much expertise. They're not really paying a whole lot of attention to the crypto marketplace. This is just a land grab. But the fact that Bitwise has 18 different offerings gives you a really good idea of how deep they are in this space and really worth paying attention to. A couple of really interesting questions here. Number one, in the category of don't trust, verify, can we see the Bitcoin wallet addresses to verify the accuracy of the holdings?
Yeah, great question. At this point, I think no ETF provider is providing the Bitcoin wallet addresses, although I'm a fan of the idea. Right now, you're relying on traditional audit, but I think it's a great idea, and I wonder if the industry will move in that direction. But as of right now, all of the ETF providers are using traditional audit.
We have another question. This is another big picture question, really important. What's the difference between buying this ETF as opposed to buying it on an exchange like Coinbase?
I mean, there are multiple differences. One, I think the ETFs are trading tighter than you can access as a retail investor Bitcoin in many places. You're dealing with institutional custody instead of relying on your own personal security hygiene with your phone. And you're tapping in to all the additional expertise layered on top of this, whether it's the disclosures or the federal securities laws, or as you mentioned, the dramatic simplification of tax, which I think is a real game changer for people, getting 1099 instead of having to comb through your statements and take screenshots. I think when you package all those together with the extraordinary low fee, it's a winner for many people.
There is a question from Chris here. How does tax loss harvesting strategy apply? When you buy Bitcoin directly, it's not a security. You can sell it today at a loss, buy it tomorrow. You don't have to wait 30 days. Does that apply here for the ETF?
Yeah, the compliance genie on my shoulder says I can't provide tax advice, Rick. These are grantor trusts. So you do have, you're considered from an IRS perspective to own a pro rata share, but I would say it's complex and you should consult your own tax.
Yeah, I've been spending a lot of time in the tax community on this question because ordinarily, as we all know, securities are subject to the wash sale rule, 30-day window from selling to buying. But there is conjecture that because these are grantor trusts, you are deemed to own the underlying asset, which means you're owning Bitcoin directly for tax purposes, meaning the wash sale rule does not apply. But as Matt says, neither one of us are tax advisors. Also, the IRS hasn't ruled on this yet. So we're not sure, but it is interesting that I'm noting a lot of tax attorneys and CPAs are speculating that the wash sale rule will not apply to these ETFs. But I would hasten to add, don't act on that. Talk to your advisor. And quite frankly, personally, I'm assuming the wash sale rule does apply. Play it conservative, play it safe. Don't get yourself into trouble or hot water unnecessarily.
Yep.
Regarding the notion that you're not yet releasing the wallets themselves for the trading, which is all transparent on the internet. There's an interesting statistic, I'm sure you saw it yesterday from Chainalysis, that because they are looking at all the wallet addresses across the entire Bitcoin blockchain, they're now saying that 91% of all wallets are positive, that they are profitable in their transactions.
That's amazing.
I find that statistic astonishing.
That is astonishing. That is astonishing. Well, we've been in a bull market for a long time, right? And the people who are holding at this point, chose not to sell. They're probably long-term holders. So that's an astonishing fact.
Robert asks, any other hidden fees beside the 20 basis point expense ratio?
Nope, that's the all-in fee. There are no hidden fees in that.
And I think that's, the same as with all other ETFs. I don't think there's anything surprising there. So at the end of the day, remember, it's just an ETF. It doesn't require anything more complicated or convoluted than that. This has been terrific information, Matt. I'm so excited that you've been here today. Again, congratulations on the success and the work you've done over the past decade. I want to let you know that we do have a new Spot Bitcoin ETF toolkit. We have one exclusively for financial advisors, another one for investors. You see 5 different materials within the toolkit. The grid I mentioned earlier that allows you to easily, quickly compare all of these ETFs. A paper that I've written, we need to temper our enthusiasm as much as Matt and I are excited about this. You need to recognize these asset flows are not going to come overnight. It's going to take a couple of years, more than that perhaps, for this to really happen. So we need to not only temper our enthusiasm, but that of our clients to set realistic expectations. We've also got a really cool infographic with cool crypto facts that will be helpful to you in client conversations. My white paper explaining these ETFs and their evolution, a whole bunch of videos as well. All of that available to you for free at the DACFP.com toolkit. There's the QR code for you to be able to access that. We also have a series of these webinars that we are doing today here with Bitwise. We'll be doing additional webinars all next week and all next month. I'm also doing a series of podcasts. We did Bitwise's yesterday. If you missed it, you can go to our website and listen to it again in case you've missed it. Not a problem. We are trying to bring on as many of the ETF sponsors as possible to give you all the information content you need to help you understand all of these new offerings. And the very best way for you to really be able to serve your client is to get your CBDA and become certified in blockchain and digital assets. At Bitwise, I think, Matt, you require this of everybody in your organization.
That's exactly right. It's an exceptional course of study, and it really levels people up in this space. So I highly recommend it.
The course is in 2 parts. First about the tech, and second about practice management to really help advisors build their business. There are 5 different tracks, depending on whether you're an advisor, home office professional, an investor, consumer, and we even have a track for professionals outside the US because we have thousands of advisors from 37 countries who have gone through the program. So I encourage you to go do that. Also, join us in Austin. Bitwise will be there for our annual Vision Conference, June 2 to 4. This is the longest running conference exclusively for financial advisors on the digital asset space, and you'll get the latest and greatest in crypto at that event. We also have our Wealth Management Convergence, March 11 and 12, which is a broader program, not just crypto, but all the issues that advisors are facing today. My daily podcast, which covers crypto and so much more. Listen to it wherever you get your podcasts. Be sure to read my Amazon #1 bestseller, The Truth About Crypto, which has a ton of information to help you understand all of this space. A lot of advisors give this book to their clients as a great value add as well. And I'm easily reachable. If you've got any questions, Matt is as well at bitwiseinvestments.com. Matt Hougan, Chief Investment Officer, thanks so much for joining us on the program here today. It's been hugely valuable. I know everybody benefited a lot.
Thanks for having me, Rick, and thanks for everybody who listened.
Bye, everybody. See you next time.
Bye.